It's a cold day in Chicago, that's for sure. I wish I was down in Florida with you guys.
We wish you were here too, man. You're gonna have to come visit us this winter, man. No doubt, no doubt.
Absolutely.
We could do the show right from here. Perfect. As the dollar's
What a week
crashing.
we've had so far in the dollar, huh?
Yeah, it broke.
Yeah, in a big way.
Yeah. Yeah.
So, yeah, it's pretty interesting. You know, Monday was the month end, and it was pretty funny how the dollar got slammed really early right off the bat, and then it reversed gears in a big way. I was looking at Monday as profit taking going on for the month end and balancing and stuff like that. I think that's why we had that little short-term reversal. Obviously, now the dollar is back on its butt again. But I think you have to be very mindful of the divergence that's happening in the marketplace right now. The euro and the Swiss are the ones that have fallen out of bed the most today. They're the ones that have broken out, the euro to the upside, obviously, and the U.S. dollar, Swiss to the downside.
Okay.
The British pound barely spiked a new move high. It struggled all week. It didn't do it on Monday. It barely spiked it, and now it's giving a very big profit-taking break on it on the day right now.
Yeah,
and I think what you're seeing is I'm sorry?
Right near those highs going back to September, too. Exactly. Yeah.
Yeah. Right. Now, remember, the dollar index, the reason it looks so bad is because of the big move in the euro and also the way the pound is riding right below its highs.
Yes.
Okay. Now, that makes the dollar index look extreme. If you look at all your other currencies, though, the Australian dollar is having trouble making new highs. Okay, it's running out of gas. Now, the New Zealand dollar, that's a raging bull. We've been talking about that for weeks, that no matter what the dollar does, the New Zealand dollar is probably going to stay neutral to higher. So that's not anything out of the, it's no surprise. But we have the U.S. dollar yen trade. Now we have gold. That's your baby, right?
Yeah.
That's starting to have a nice little corrective move to the upside. The U.S. dollar yen, now it's trading right in between 104.80 and 103.80. That's kind of like the breakout area, and it's hovering below that 104.80. If dollar weakness is prevailing, I still think you're going to see U.S. dollar yen break out to the upside. Okay, I just do not see it being a bear. You would have to get below 103.80 to really make me look neutral to bearish on that one. Okay.
So yeah, let me just get that one straight. So, are you saying that the yen is going to go higher, like 105, 106?
I could see it going up to that area.
Okay,
absolutely.
cool.
I'm not looking for a major move.
No, I just wanted to get it straight. Right. No, I know what you're saying. It's hanging in there. It's battling this area right here. No doubt. Right. Yeah.
Mm-hmm. So, and I think that has a lot to do with, you can see some of the divergence that's going on in the major markets that affect currency pricing. Now, when the dollar index spiked lower back around November 9th, 10th, okay, it bounced off that for a couple of days, and then it went sideways for a couple of weeks. The bonds, however, they spiked like 2 days lower or later, then they rallied up, and they were holding. They were the ones that led the break here, and now they are not making new move lows while the dollar index is. So when you have divergence between interest rates and the dollar index, okay, that makes me say that obviously there's a play on one of the bigger currencies, which is obviously the euro. The pound is not breaking out to the upside. Okay, so euro strength. Long term, I can see it developing, especially with the Biden presidency. A Biden presidency is bearish the dollar overall. But right now, you have the interest rates because they're not making new lows. Okay, that tells me that we're starting to see the stretch on the U.S. dollar, where overall we may remain bearish, but we could have a big snapback correction. Because if the euro, it could markets come out like they go in. There's been if you look at the slope, especially on a lot of the currencies versus the dollar that are strong, they're very steep. Markets don't go in a straight line. They just don't, So, and we're coming into now that we're done with the balancing for the end of the month, and we're coming into futures rollover, we're coming into the end of the year, we're going to have a lot of volatility, I think. And unless the bonds really start to break and continue going lower, it's going to be hard to be a big dollar bear. You know what I'm saying? Like if all of a sudden the 30-year gets a rally, okay, you're not going to see the dollar continue to fall versus the euro and the pound. It's just not very likely.
No, listen, I can see it. Yesterday even it was a trading because what we're talking, folks, is major divergence. I mean, that's the bottom line. My take is that we are going to 88 in a dollar, but we'll see how that shakes out because it's going to be predicated, no doubt, on those bonds.
And that's also the Yellen trade. See, now you got to realize Monday was the rebalancing because of the end of the month. Then they confirmed that Yellen's going to be the new Treasury Secretary. Now, that's a big deal because everyone that watches the bonds, especially, knows that she's pro-government, pro-big government, government control, and as far as keeping rates down, she's most likely going to raise rates.
You think so? She's been a dove for a long period of time, though.
That was when she was Fed chairman, but under this situation with the reality of they're going to refinance the next bailout, and then after that, they're going to have to start selling bonds. They're going to have to start raising interest rates. They have to, because there's no room.
That's what you're saying.
There's no room. They have to.
To basically get a demand side of the equation, folks. What Teddy's saying, that there's no doubt we're going to sell hundreds of billions of dollars worth of bonds just to stay flat. It's going to be intriguing, man. Particularly, Teddy, because the dollar, from the March highs to the lows, it only did a 0.23% retracement. That's very weak, man. So this is going to be intriguing watching this whole baby shake out. But there's a lot of moving parts, man. There's a lot of moving
but the
parts.
interest rates, I think, are going to be key to this whole equation. Now, this is going to pan out over the next couple months. This is not a daily or weekly trade.
Sure.
But this really is, and this is giving us a big indicator for how the first half of next year will go, though. Where we could be seeing, after they have the bailout deal, you're going to see a spike in the bonds, and then I'll tell you what, the big short in bonds and notes is coming, and when that comes, then you're going to see the dollar collapse. That's when you'll see the euro back at 130, 140. It's
intriguing. Like I'm even saying to folks out here this morning, if you're going to Europe next year, the bottom line is nothing wrong with swapping some dollars for euros right now or pounds. And when
now, I bet you it's a good deal.
Yeah, and when I'm saying that, I'm thinking like you're big in the currency market. All these big dudes in the currency market. I can see that we can actually go lower in the dollar, because if people start doing that, it's like, okay, man, hold it. That they're hedging their bets here. Do you know what I mean? It's like, wow. Okay, so
right.
Yeah.
And when people start to travel, too.
Yes.
Dollars are going to get sold off no matter what. It's going to happen, So I think that's the longer term trade.
Yes.
But like I said, short term, the yen, watch that 104.480 to 103.80, either way, whichever way it goes. That's probably where you see a new trend emerge for at least a week. I'd be very careful being a buyer in the euro US dollar right now at these levels, because you're going to see a lot of volatility.
Well, listen, get your bags packed. Get a date down here. We're going to bring you golfing.
January,
Come on down. We'll bring you up to Bel Air Country Club. We'll do some golfing. You'll have some fun.
Wow. Okay.
Seriously. Come down. Get a couple of dates here. Come down for a weekend. Tommy, you and I, we can do the show together, man. It'll be awesome.
That sounds great. That sounds like a good idea. We'll talk about that later.
Perfect.
Thanks.
You have a great one. Have a safe one. Thanks for the education, Teddy. Talk to you next Wednesday.
Thank you, guys. See you next week.
Stay right there, folks. Tommy and I are coming right back.